Ranch, and we're speaking with Bill Krumm about reverse mortgages. Now, the most famous reverse mortgage speaker is Fred Thompson, the former senator. So what can you tell us about reverse mortgages, Bill?
I'm fortunate to be working for AAG, the company that Fred Thompson represents. The reverse mortgage is a wonderful product for seniors. It was designed to help them stay in their homes. Technically, it's called the home equity conversion mortgage because it allows them to convert their equity into cash to use for other needs that they may have in retirement and allow them then to stay in their home without any payments the rest of their life. They can sell the home if they choose, and in that case, it's just like the mortgage they had when they purchased their home. But if they live there as long as they live, then their heirs would receive the proceeds after they're gone.
Now, Bill, we have a lot of people buying resale homes here at Robson Ranch. How does that program work with resale homes?
Well, that's interesting. Most of us, of course, think of the reverse mortgage as a way to pull equity out of our existing home, but it can also be used to purchase a home. In this case, the reverse mortgage is on the new home, and so a portion of the purchase price would be covered by the reverse mortgage, and the other portion would be from their own funds, very often from the proceeds of the sale of a previous home. Let me give you an example. Let's suppose that someone decides they want to move down here to be closer to their children, and they sell their house in Minnesota for $300,000. Well, they have three options. They can come down here and pay cash for a $300,000 house. They can take part of that money as a down payment and get a normal forward mortgage if they're comfortable making payments and if they would qualify for a new loan at that point. Or they can use a reverse mortgage. With a reverse mortgage, depending upon their age, they might get approximately half of the purchase price out of a reverse mortgage, and they would have to come up with the rest, usually from the proceeds of the sale in Minnesota or wherever they're coming from. That way, they would use $150,000 of their own funds, $150,000 from the reverse mortgage, and they would buy a $300,000 home. That way, they could live there as long as they live without any required monthly payments. That then leaves them $150,000 of the remaining equity from their other home to use for whatever retirement needs they may think is appropriate.
Bill, I like the idea of no mortgage payments for the rest of your life.
Well, that's clearly the most appealing part of a reverse mortgage. The fact that you can have that home for as long as you live without payments and pass on whatever equity is left to your heirs just as you would with any other loan.
So if I understand, the buyer can leverage his funds from a previous residence that he sold.
Yeah, that's a really unique thing. If they've sold a home for $300,000 and they want to buy a home for $300,000, that works fine. They would have roughly half of their funds left. But let's suppose that they wanted to buy a bigger home here at Robson Ranch. Yeah. There are some beautiful larger homes. Then they could use more of their funds and get a larger home, still retaining some of that for retirement needs. Or if they were wanting to downsize, they could buy a smaller home and then direct even more of the proceeds of their previous home's sale into their retirement needs.
Now, what happens if they choose to sell their house and move on, or one of the other passes?
Well, that's interesting. Since there are no payments being made, when they leave the home, when the home is no longer their primary residence, either because they've passed away or they've decided to sell and move closer to some children, the same thing that would happen as normally happens with a mortgage. They'd call a realtor, in this case probably you.
I hope.
And you'd put their home on their market, sell it at closing. Our mortgage would be paid off, and the balance of the equity would go to them or their heirs if they had passed away.
Okay. So if I understand, the bank does not get the house at that point.
Right. That's one of the chief misunderstandings of a reverse mortgage. It's just like the loan that they have on their house now or when they bought their first home. When they sell it or they pass away, they or their heirs will get the equity that is available to them from the value of the home at that point.
So the lender doesn't get the home.
Right, that's one of the major misunderstandings about a reverse mortgage. The reverse mortgage, in most ways, is just like the mortgage you had when you purchased your home. It's just a lien. The title doesn't transfer. So you still own that home, and when you sell or pass away, the equity goes to you or your heirs, just like it would if you had a purchase mortgage on it.
Well, Bill, what happens when the people pass away, now maybe 20, 25 years in the future? Are the heirs stuck with paying for the house?
A reverse mortgage is what's referred to as a non-recourse loan. So if for some reason the house is fallen in value, like things did in 2008, the FHA insurance is in place to cover that shortfall. So neither the homeowners or their heirs are liable for any shortfall.
So, Bill, how do the buyer proceed with qualifying for a loan, and how much will they get?
Well, the amount that they receive is dependent upon their age. The older you are, the more you get, the value of the home, and current interest rates. It's real easy to qualify for a reverse mortgage. Currently, there are no credit score minimums, and there are no financial qualifications. So one of the borrowers has to be 62 years of age, and they have to have equity in their home. So those are the two main requirements. They have to be aware that they have to continue making their insurance payments, their property taxes, and maintain the home the way they would normally.
Bill, I want to thank you for coming to Robson Ranch today and talking about reverse mortgages. And hopefully those buying a house will consider this as an option in creative financing.